Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to Motor Trade Radio. We're joined today by Chris Plumb, CAP HPI's Senior Valuations Editor, for our regular end of the month review of trade value. So welcome, Chris, to your first ever Motor Trade Radio podcast.
Thank you.
Hey Chris, good morning and welcome.
Thanks, Phil. Yeah, looking forward to this. Thanks for inviting me on.
Oh, you're more than welcome. You might be the permanent substitute if you're too good. So it's up to you on this one, Chris.
Well, we'll see about that.
Should we let the listeners decide?
Well, yes. Yeah. I think that's the safest option.
No, welcome, and I know we caught up before recording, so I'm glad you're keeping well. And it's been a busy time. I think we say this every time now, don't we? I mean, it's never not a busy time in the current state of the market. But and I know you're very heavily involved with the EV world, which keeps you even more busy with everything going on in the battery electric vehicle space, doesn't it?
Yeah, it does. And when you think of especially in the used space, the market share EVs probably takes up 90% of my working week now, talking about them and looking at the data. So yeah, it's certainly a key area, but it's kind of, you want to be where it's going on as well.
Exactly.
Within the data. So that's exactly front and centre.
Brilliant. So as always, we start off talking about, the main headlines and we're talking this, about that 3-year 60 mark, which I think has gone down by 0.9%, equivalent to £210 this month.
Yeah. So that's correct. So as we go into June, so I can't believe we're saying June already. The average movement at 3 years, 60,000 miles, at that sort of key benchmark for the industry, is a reduction of 0.9%, or like you say, £210. It's been a fascinating month to really track. The market, I guess it feels like it has returned to more of its sort of seasonal patterns. Although it's worth noting that the movement sort of from May to June, that if we were to take out those COVID-affected years of 2020 and 2021, the average movement is minus 1.6%. So in fact, with a 0.9% reduction, actually reporting it's one of the strongest movements, or the strongest historical movements we go into June. So based on that, the market does feel like it's in a really good place. I think there continues to be really strong demand for that good quality stock, and that's probably outweighing some of the supply at the moment. It's also worth noting that, to just coin a football phrase, that it does feel like May has been a month of two halves in some respects. The first half of the month seemed a little bit tougher, and probably was performing kind of in line with what we were seeing in April. But as we hit around about the 12th, buying activity just seemed to increase slightly, and prices did seem to stabilise. Within our daily movement report that we track our CAP live movements on a daily basis. So from about the 12th, we only saw values drop by a further 0.1%, which again does seem to indicate that things had started to firm up, and potentially, dare I say, maybe some green shoots starting to appear. So let's hope that continues. But yeah, certainly the market feels like it's in a good place at the moment.
And I mean, as you say there, we talk all the time about monthly figures, but you're tracking this on a day-by-day basis. So you'd have seen some of the activity around the 2 bank holidays in the month of May. And obviously, I think Darren last month talked that about seasonal normality was the sort of theme within sort of April into this month. I mean, is that still the case, or is this, I don't know, are we back to a seasonal normality at the minute?
Well, that's what it kind of feels like, and that's sort of the sentiment we're seeing from the people that we're talking to. As I say, in reality, maybe it's just slightly a bit stronger than that. I think that there is sort of strong demand out there, or good demand out there from retailers, and some of the feedback we've heard back regarding the bank holidays. It's kind of just performed how you'd expect it to perform. I think, again, some of the sentiment is that May has been another good, solid month, with consumer demand remaining at least comparable to where it was sort of last month as well. Profits and margins have remained relatively healthy, along with similar days to sale. Certainly, there is a focus from retailers to be looking at that sort of most desirable stock out there, that first fast churn stock that does seem to be helping with that stability at the moment. But yeah, I think that seasonal market, it's certainly returned to that. I certainly agree with that. But maybe slight indication that it's slightly stronger than that. And I know we'll touch on what happens next, probably at the end. But beginning of the year, our forecast team at Cap HPI were saying that this year should be a stronger month than should be a stronger year than last year. And for many of the months, especially what we're going into now, the seasonal average movements, the movements we make, will be stronger than those seasonal averages, and that has kind of been playing out at the moment.
Yeah, and I suppose really based on the last period of time, 2021, 22 and 2023, I mean, any kind of stabilisation can be seen as normality, because we've seen some volatility, haven't we, over the years?
I think just being stable breeds a little bit more confidence into the market as well, and that is a positive. I was looking at the historic movements over sort of those COVID years, and go back only 2-3 years ago, we were reporting a plus 6.2% movement into June. So long gone are those days. But yeah, we are now. I think it helps businesses plan in terms of buying stock, retailers buying stock, not being too concerned that next month's book drop or the live movements are going to be as large as probably seen at the back of last year, the end of last quarter for last year, when there was some big reductions. So the stability, I think, does breed that little bit of confidence within retailers.
Less of those extremes.
Exactly.
We expect those movements up and down, but it was the extremes, wasn't it, that created that volatility.
Nobody wants volatility, and it must have been so difficult working in a retailer, planning, sort of forecasting, looking at what do you buy a vehicle at, where do you retail it, etc. Sort of both ends of the market. So yeah, it's that that stable market at the moment, probably a little bit better than seasonal averages, showing us that we're not in a bad place.
And Chris, can you tell us how that stability has actually played out? Certainly across the various age bands, which is one of the criteria you look at each month.
Yeah, no problem, Curtis. So at the 1 year point, values also declined by a similar amount, so 0.8%, equivalent to around £325. It's the older end of the market that we experienced some bigger drops or some bigger decreases in values, particularly due to the presence of higher mileage, poorer conditioned vehicles being available. So 5 years old vehicles decreased on average by 1.3% or £160. And at the 10-year mark, values decreased by 2.3% or £100.
And how about the various vehicle sectors? How did they perform over the course of the month?
Yeah, so in terms of the sectors, convertibles and coupe cabs experienced their traditional seasonal rise, though. Looking out the window today, it doesn't feel like the sun's shining at all. Off the back of the bank holiday. But values for convertibles rose 0.9%, which is equivalent to £80. And for coupe cabs, that was 2.5%, so around £400. Again, these are all at the 3 years 60,000 point mark. However, all the other sectors that we're reporting have seen decreases. So Super Mini came down it was one of the smallest of the main sectors to see decreases by 0.1%, where lower medium and upper medium vehicles had slight drops of minus 0.8%. SUVs performed differently to that, so they came down on average minus 1.1%, around £270. But as ever, the devil's in the detail. So if we break down SUVs down by size, small SUVs decreased by 0.8%, £90, medium by 1%, £190, but large SUVs dropped 1.8%, so 685. So large, sort of the biggest drops. It seemed that price range SUVs with internal combustion engines were certainly in the most demand, while some of the larger, more expensive models, as well as plug-in hybrids and some of the BEV models for SUVs, saw some of the biggest decreases. Or some of the other sectors, city car came back minus 1.4%, exec minus 1.2%, large executive minus 1.8%, luxury executive minus 1.4%, MPV down minus 1.2%, and sports was down minus 0.9%.
So that's pretty steady across the board, isn't it?
Yes, as I say, there's no, probably with the exception of large SUV, because it was one of the worst performance or subsectors. But still, when you think that the average, when I said the historic average movement into June is circa minus 1.5, minus 1.6. Most of those sectors fall within those averages.
And now onto the area of fuel type, which is always an interesting one, because this is where some of the detail certainly sits, doesn't it, Chris? But what's been happening in the fuel type? Because we've seen this year, the strength has been through petrol, diesel, a little bit of hybrid, plug-in hybrid. You just referenced that in some of the SUV stuff, but BEVs still seems that volatile market. What are you starting to see in the fuel sector at the minute?
Yeah, there's lots of nuance within the fuel sectors, and it is a really interesting area to track in the market. So we've continued to see really strong demand for petrol vehicles, as again at 3 years 60, they decreased on average by just 0.4%, so a lot stronger, and that was equivalent of £135. While diesel, plug-in hybrid and pure hybrid vehicles experienced some larger decreases, anywhere between -1 and -1.1%. So we're talking sort of circa £200 across those fuel types. But it is battery electric vehicles that everyone seems to want to talk about, and their continued, I guess, that continued downward pressure that we see. So we are reporting on a movement for a decrease for BEVs this month of minus 3.6%, which is equivalent to about £785. I guess if you were trying to be positive, you say it's slightly better than last month, which saw a decrease of minus 3.7%. But they've performed very similar to last month. And can you believe it or not, we're now reporting on our 21st consecutive month of EV declines. Over that period of time, the cumulative decrease in EVs, again at 3 years 60, is circa 57%. And just put that into context, that is petrol vehicles over that period of time also came down just by 12%. So considerably big adjustments in the market. It's some of those numbers are quite eye-watering.
Keeping on the positivity side, there are some significant declines, aren't there, by model type? I think you mentioned some of them in the editorial, but there is some price stability there, isn't there, for some models? So it's there is some particular EVs that are really driving that market down.
Yeah, I think so. And I'm not sort of pick out any EVs that have or single out some EVs. I'll give you examples of ones that have moved. But again, of all the EVs that we value at 3 years 60, 89% saw values decrease, 10% saw values stay level, and just 1% saw values increase. When we look at some of those noticeable movers, you still got models like the Audi e-tron Sportback have come down 5.9% or £700. The Nissan Leaf, 6.8% or £600. The Tesla Model 3, 4%, £800, and the ID3, 6.2% or £785. There are some models that say that had stayed level, so things like the Cooper Born, the Lexus UX, and the Seat Me saw no change in value. While the one vehicle to see values increase was the Mini Cooper, which seems to be in good.
I was going to ask who was that 1%.
Yeah, it seems to maybe have hit a price point, but there are big drops. To your point, Phil, But from a used consumer's point of view, these cars do look extremely good value for money now. And in a lot of cases, when you do the comparison between ICE to EV, the EV 9 times out of 10 seems to be cheaper now. So it does give an opportunity as well. Even though prices have come down, it does open the market up, especially when that true used 3-year-old product.
Yeah, I think, like you say, I think there has been a realignment, and there's significant realignment. We're still feeling a bit of the pain, and I think, to your point, there is still volatility, and some of that is driven by new models, life cycles, etc. in the marketplace. But there is some good propositions there as a used vehicle for the right person that can take advantage of that EV.
Yeah, I totally agree. It's well, I'm an EV convert myself, so I'll speak positively about them to anyone who wants to listen, really. But I think there are some opportunities out there in terms of if you're looking to stock, maybe you haven't looked to stock an EV for some time because of some of the big drops. You can now buy at today's trade, put the vehicle on at a sensible margin, and I think we'll touch on the days to sell in a bit, but we're seeing that the vehicle's priced right and it's at the right type of price point that they do sell really well.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Chris, every month you poll the views of the auction houses. What were they telling you about stock levels and demand over the course of May?
Yep, so in terms of the current stock levels at the auction houses, so of all the respondents that we received, just over 54% said that stock had increased over April, while 46% said it was about the same, so a fairly even split there. Looking then at demand, 62% said that demand was about the same, with only 23% saying that it had increased. Again, going back to that message of being fairly stable.
And within the editorial, I did notice you mentioned there was a slight increase in demand for stock from some of the franchise dealer groups. What do you think prompted that?
Yeah, I think the feedback we were receiving is, especially in that second half of the month, that there were more franchise dealers being active in the market. I think some of that is kind of it traditionally or seasonally happens, because we're now off the back of far away from March and April with the new car month. So franchise dealers do come back into it, but it may be a slight indication as well too. We know that there's downward pressure, or there's the new car registration, especially in terms of private new car, remains a challenge out there, and maybe used as offering another opportunity to maybe fill some gaps on forecourts, because maybe franchise dealers aren't generating as many part exchanges as they normally would, but also used cars still remain profitable.
Yeah, and that's an interesting point, isn't it? So if there's less demand for new cars, then dealers maybe at the moment paying a bit more attention to the used car forecourts where there's potentially more demand.
Yes, and I think that's kind of what we're seeing as well. But they're coming back into the market, potentially coming back into the market also when we might see a slight reduction in supply, especially off the back of those cars that were never registered through the pandemic, which we would have expected starting to come in now. So that prime retail stock for 3 or 4 year old cars, there potentially won't be enough of them to go around. So from a market's perspective, the more people trying to put their hands up for them, again, the more confidence it breeds in terms of the wholesale performance.
Yeah, and I think to add to that point, Chris, I think you're right. I think the availability of non-EV products in the new vehicle space is obviously contracting, isn't it? So if there is customers out there that are looking at, an ICE vehicle, within certain sectors, then sometimes the main opportunity is more in the used space than it is in the new these days.
Yeah, I totally agree with that, Phil. It's people in terms of what they're looking to stock, etc. It's maybe have to reevaluate and maybe have to dip back into that EV space if they're looking to fill those gaps on forecourts.
And crystal ball time, which is ever more difficult these days. It's and I think Darren every month tries his best. But I mean, you were talking about this two halves for May. We threw the bank holidays. Ignore this week because this is one of them weeks where there is extended breaks over the bank holiday. But we're heading into the month of June now. I mean, what are you expecting now of for the people listening, where we talked right at the start of the show about this stability, potentially return to a normality of, increases and decreases, but of a smaller scale than we saw through the pandemic recovery period. You've already mentioned that volatile space of EVs, but there's some good price points there, and there's more and more EVs probably reaching price parity now, as with some of these movements taking place. I mean, what's your view now as we go into the month of June? We won't ask you to go much further than June because I think that's getting harder and harder. But what's your expectations now for June?
Yeah, so again, when we look at what has happened historically, so we take out the COVID-affected years again of 2020 and 2021, the average movement at 3 years 60 is around minus 1.2%. We do not think that, famous last words, and I probably won't be invited back on again if I get the prediction wrong. But we don't think it's going to be. Will it be in line with the minus 1.2%? Potentially. Would it be as much as 1.2%? Potentially not, because we do see really strong demand out there for good quality used stock. So we don't see that changing particularly at the moment. We know, traditionally, as you go through sort of as we're entering the summer months, supply can start to reduce. We think that there will potential for that still to happen, not by massive amounts, but we will see that reduction out there. So while supply and demand's in a fairly good position, we think that stability, more of those seasonal movements, or even better than seasonal movements, will continue. If you're looking to stock up on vehicles, it's a good opportunity to do it because we're not sure where any extra stock's going to be coming from in the short to medium term.
Yeah, I think we talk about supply and demand, and we're in a fairly, as you say there, that sort of even balance between supply and demand. But it wouldn't take much for consumer confidence to increase and trigger a shortage of quality used cars pretty quickly, wouldn't it? And once that retail demand goes up, it soon eats up through any product availability coming into the sector.
Yeah, no, I agree. And it wouldn't, like you say, it wouldn't take much to do that. I know it's slightly looking a bit further out, but I know our forecast team at CAP have been contacted, in terms of what impact do we think the general election's going to have on demand, the Euros, the Olympics, and I think our general message is that it doesn't have much of an impact. Of course, there will be certain days when games are on and where it might have a slight blip in terms of that consumer demand, but in terms of to cut that question off at the pass, it have minimal impact on terms of the used market.
I wonder how many times Dylan's been asked that over the years, and asked the same analysis and data to support his answer.
I know, but we get asked it quite regularly, and you can understand why people do ask it. I think it's a much bigger picture, and we probably don't have the time for it. But in terms of the general election, etc., it's probably going to have more of an impact on the direction of BEVs and the environment, etc. But that's a completely different subject than sort of what we're covering today.
And finally, Chris, as you mentioned earlier, one of your specific areas of interest is used battery electric vehicles. So we couldn't have you on without asking for your views on some of the broader used EV trends. So starting with, what's the data telling you about the possible future direction of EV values, certainly over the coming months, and especially in terms of pricing and, as you alluded to earlier, those days to sell?
Yeah. I think one thing's for sure is that supply is going to continue to increase into the used market. Already this year, we've received over 70% of the total sold data that we've received for the whole of 2023. But I'd imagine actually April was the record month for us receiving sold data. But I'd imagine if I was invited back in the future, I'll be saying that for every month coming, because we just know that there's more volumes coming back in. But these are positives. This is sold data we're seeing. So we're seeing more vehicles being sold in auctions and wholesale than we have at any other time. So vehicles are selling. We are seeing continue that pressure on prices, though, and maybe people baking in a little bit in insurance in case there's future book drops. But yeah, that supply is going to increase. I think an area that I found fascinating to track this month within our retail data, and some of the feedback we're hearing from some retailers, is not all EVs are used EVs remain a challenge, but there are some areas where actually it's maybe a little bit brighter from a retailer perspective, and we're hearing between sort of £15,000 to £18,000 seems to be a bit of a sweet spot. Now, when you think now how many vehicles fall within those 18,000, up to £18,000, that probably ranges from something like a Zoe, a Leaf, a Corsa E, up to a 4-year-old Model 3 with Tesla Model 3 with 80,000 miles on the clock. So there's lots of vehicles that fall within that. So that choice is always increasing for the consumer. But what I did find even more interesting, or further interesting, is reviewing our sold data and breaking it down by age point. So when we looked at for battery electric vehicles solely, we found that the average days to sale for all EVs sat around about 39 days. When you broke that down even further, so vehicles up to BEVs up to 2 years old, which typically carry that higher price point, so over that £18,000, on average carried days to sell for about 45 days. For context, petrol at the same age point is about 34 days. But when you broke that, change that age gap or that age bracket for BEVs to 3 to 5 years old, which aligns more closely when you look at the adverts or the current adverts, the prices of vehicles for sale at the moment in that age bracket, the retail that desirable retail price point, the days to sales decreases from 45 days for EVs down to 33, and it's exactly in line with the average petrol vehicle prices at the same age bracket. So it shows that there's a little bit more nuance going on in the market. Maybe that sort of the later plates, the nearly new, might be slightly more affected by those well publicised strong new car offerings. But when you get to that true used stock between 3 to 5 years old, it is performing in line with petrol. So that's encouraging to see.
I mean, Chris, that really is a fascinating stat, and I don't think it's one that we've had on the podcast before. So, you are starting to see that parity in terms of days to sell for those 3 to 5 year old cars, and also the point you make about the sweet spot being up to £18,000. So I'm sure that's going to resonate with a lot of listeners. Lastly, we talk about it a lot on the podcast, the new entrant brands coming into the UK. And of course, some of those models are starting to appear, albeit slowly, in the used car market. Are there any trends that you're actually seeing in terms of how these new entrant brands' values are performing, or is it really still too early to tell?
Yeah, I still think it's really early days in terms of these new entrants, because we're not really seeing them perform very differently to some of the more established makes and models, because they've all been under pressure of late. I think what is encouraging, and from a used perspective, though, is that the new entrants are partnering with some really established brands and retailers within the UK market who are very experienced at selling new and used cars. Don't get me wrong, the new entrants, they will help to probably shift the marketplace, change consumer behaviour, which isn't necessarily a bad thing, especially as we start to see there's going to be more and more coming into the market. But in terms of actual used product at the moment, because we're seeing challenges to the whole market, it's hard to sort of really single out that it's just new entrants sort of really being impacted on it. Ask me the same question in sort of 3-4 months' time, we might be able to give a little bit more nuance within the answers, but certainly not seeing so much at the moment.
And you do make a good point there, Chris, about the some of the franchise groups who are selling new entrant brands. They're established players that they'll know how to set used car values for some of the trade-ins that they get back after
And,
3 years.
and essentially, they'll know their customer base as well. And,
Yeah.
Education, qualification, etc. is what we've been speaking about for EVs for a very long time. And these established players who are now seeing it as an opportunity to sell EVs, they're very good at that. They'll know their customers inside out and make sure that they sell them the right product.
Fascinating stuff. And I think you point right at the start of that bit there was, there's more and more vehicles entering that sweet spot through time in the life cycle, everything else. So if that is a current sweet spot in terms of that consumer market, that's sub 18,000 up to 15 to 18,000, maybe even 20,000, then as you get the life cycle, and you mentioned the volumes coming back into the market, that'll just continue to increase. So the choices and vehicle propositions for the consumers within that market will only increase because retailers bigger opportunities.
Yeah, well, when you think that one of the major barriers to entry that's still quoted from consumers is cost of acquisition, that argument seems to be moving away now for that used product in the market, especially, as I say, around sort of over 3 years old, because that's certainly just not the case.
No, it's great, and from Curtis and I it's a huge thank you for coming on to the podcast today, Chris, and chatting through it. I know. I think it's your debut on the podcast, so I've certainly enjoyed chatting with you. And I think your level of detail, especially that you are 90% of your time speaking around the EV market, which keeps everybody busy at the minute. So a huge thank you for coming on today, and thank you for sharing some of your insight and knowledge on the sector.
No, thank you for inviting me.
And if you do want a deeper dive into some of the details that we've kind of skimmed on today's podcast here with Chris, then please do head over to cap-hpi.com website, and you'll find the complete editorials on there for the cars, LCVs and bikes on there, or check out the social feeds, particularly from either Chris or from Darren Martin or others within the CAP HPI team, and you'll see the full editorial there that you can get sight of and delve into the detail in a little bit more.
That's all for this special weekday Motor Trade Radio podcast. Many thanks once again to Chris for joining us. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.